Stocks on Wall Street plummeting Thursday amid fears of the growing spread of the coronavirus in the United States. The Dow falling more than 1,000 points at its low today. Well, let's see what steps investors should take amidst all this. Let's go to Minneapolis, Minnesota via Skype, where we're joined by Carol Schleif. She's Deputy Chief Investment Officer at Abbot Downing. Well, Carol, the yield on the 10-year Treasury is absolutely collapsing. It is down to 0.89%, an all-time low today. Is it signaling that, hey, the Fed has got to cut rates yet again, and a big one at that?
I think it's more a signal of the fear in the market and the fact that nobody can get their arms around how long this lasts or how to see beyond it. And so it's really more a function of the fact that you've got a lot of demand driving the prices up, which correspondingly takes the yields down, as opposed to people driving the yields down trying to imply something else. But actually, all things considered, it ought to help the housing market.
All right, so perhaps if you're in the market for a refi, it's pretty good. But given the fears that you were talking about that investors are going through right now, what steps should they be taking at this point with their portfolios?
Well, I think ideally and hopefully they were rebalancing and raising cash going into this. It's one of the things we've been advising our clients all through late last year, was to make sure that they had a handle on cash needs. They were rebalancing because markets had run for a very long time. And to the extent that you did rebalance and take some money out of equities and put it into fixed income, now for the brave part, it might be an opportunity to start thinking about reversing some of those trades and bringing back into maybe picking away at some equities.
All right, Carol, we're having some problems with audio, but if I heard you correctly saying rebalance, you should have rebalanced by now. But if you are going to rebalance right now, what do you do if you're taking some profits in stocks that have already dropped? What do you put them into? I mean, fixed income, we talked about treasuries earlier. We're seeing yields keep falling.
It might be okay to sit still in some cash and just be patient sitting in cash for a period of time.
Sit still with cash, and then I assume you're going to be on the lookout for a signal as to when to get back in. What should you be looking for?
Not necessarily a signal, but even tiptoeing in at current valuations is probably okay if you have a very long-term time perspective, because we wanted you to rebalance last fall out of stocks into fixed income. And now, given the way markets have rearranged themselves, it might be time to start going back the other direction.
By tiptoeing in, I assume you mean dollar cost averaging into your new investments. But what kind of stocks or areas should you be going into at this point then, if you've got that cash?
Is still looking at some growth-oriented sorts of names, particularly in technology. You've had a lot of industries beaten up in here. You saw a nice rally in healthcare yesterday, but it had been beaten up for a long time in here. But some technology names in particular, consumer names, names that'll play, because if this virus proves to be rather short-lived, if you will, in terms of nobody knows, and that's the problem with trying to protect markets. Nobody knows what the cycle looks like and how long it goes on. But if it doesn't go on for very long, we've already seen it seems like a peak of the number of cases in China and some of the factories coming back online. If that goes around the globe and it happens sooner than people expect, you've got global policymakers, both at the Fed and at government level. So you've got fiscal and monetary policy very accommodative around the globe. And if you put that on the reasonable consumer and the reasonable business we had going into this, you could see firmer markets, hopefully by mid to late in the year.
And lastly, Carol, with the treasuries down as much as it is, the 2-year even falling faster than the 10-year, do you think we're anywhere near a bottom in terms of treasury yields?
Who knows? It's definitely unprecedented territory. We haven't ever seen 10-year rates where they're at, and one would expect some sort of rebound, hopefully, from that. But it's going to take confidence in the market, and that's going to be in short supply, I think, in the next few days, if not the next few weeks, until this sorts itself out and seems to stabilize.
All right, so maybe a while. Thanks a lot, Carol, for joining us with your thoughts. Yeah. Our thanks to Carol Schleif, Deputy Chief Investment Officer at Abbot Downing, joining us from Minneapolis via Skype. I'm Fred Katayama, and this is Reuters.